Every trader hits that wall. You've learned the setups. You know what price should do. But in the live markets, when price is moving fast and doubt begins to creep in, it's very easy to hesitate, to second guess yourself, and to even break your own rules. And this is exactly where coaching changes everything. Inside my private community, I host weekly group coaching calls and live Q&As to help traders, both new and experienced, to bridge the gap between knowledge and execution. These aren't pre-recorded webinars or vague theory. These are real-time sessions where we break down trades, correct mistakes, and refine strategies with direct individualized feedback and clarity. And today, for the first time ever, I'm releasing one of my private sessions publicly. So whether you are attending one of these sessions live or on the recorded replay, these sessions are designed to shorten the deep learning curve involved in trading. You're going to hear real questions from real traders, and you'll get real solutions rooted in the VWAP Wave system. No fluff, no hype, just structure, execution, and edge. If you've ever felt like you're just this close to consistency, but you just can't seem to get over that hump, then this is for you. Coaching from a professional is often what separates the divide from the amateur and the professional. So let's dive into that group coaching session. And if you feel like it's bringing you any value, be sure to check out the description of this video. There you will find a link to join a full week free trial where you can join our full private community and attend the next live session, including my daily live trading streams. So let's dive in. Here we are, back again. Welcome to group coaching, starting at 12:30 Eastern Standard Time on the dot. Got the recording going for anybody who can't stay the entire time or wants to review this later. This will be in the class recordings section. So we did have some interesting trades, quite the flush. You know, this kind of blew right through VWAP, blew right through lower band, went all the way down to what was about this low volume node from this big session we had on the July 3rd all the way through the 4th of July. So that was kind of right here. Let's see. This low volume node right there. Right there. All right, significant low volume node. We went right to it. So what I want to focus on today, guys, I want to talk quite a bit about multi-time frame analysis and, you know, using the higher time frames to build conviction and find high probability trade setups. What most people master first, obviously, is the intraday chart, right? We have our bands, we have our VWAP, initial bounds, which all create great setup locations, but the most common question is, well, you know, didn't quite make it to the band. Why not, right? Or we sold below the band, we came right back, we never got any continuation. Why not, right? And there's usually something taking place on the higher time frame that you might be missing, right? And what usually happens is people get really comfortable on the execution daily chart and they kind of lose the forest for the trees when there's a lot happening on the higher time frames that we really need to be mindful of. And that's what's going to take you from being a good trader, you know, on the intraday chart to being a great trader by using the multi-time frame analysis to create better trades for yourself. Okay, Corey's got a question. If there's a low volume node and we already trade through it once, does it lose the same value it once had? On a higher time frame, no. On a intraday chart, yes, because it's going to fill in much faster on the regular trading hours chart than it will on the higher time frame. It could fill out, but they're generally still important levels, right? So we still have this low volume node here that we had to work through, that we had a lot of difficulty. It was down here, right? So it kind of shifted a little bit. So I think, you know, higher time frames, they'll generally hold Also take a look at the composite. We'll talk about that in a minute. And then another question, how do you determine that a VWAP bounce might not bounce like earlier this morning? I mean, you don't, right? I wish I had a, you know, a, a test that would let us know. Out of the open, that's always going to be a risky trade, right? If there's like serious momentum out of the open the first 5 minutes and it's just going straight down, that's a risky trade, right? Same if there's news or some type of massive rejection and we're just going straight down, right? That makes that VWAP bounce a lot riskier, right? It's more of a scalp and you can expect it to bounce and go straight through it. So when there's high momentum out of the open or clearly lots of volatility, it lowers the tendency. The best VWAP bounces, right, are generally on a trend day, which we kind of had here, right? We traded above upper band. We came back. This was a nice VWAP bounce, right? We're trending, right? We come back, right? So, but the volume of the open kind of ruined everything. Kella, I was wondering the same because I have that 7.3 volume node on my chart as well. Yeah, so the longer term ones are always great. You can always build yourself a composite, right? So we've been in this range, and I think Evie was just saying this. We're in price discovery, but like we might be in price discovery on the session above VWAP bands, but like we could still very well be in a balanced market on the higher time frame, right? So if we look at our hourly chart and let's remove these, this is all we have, right? But I can clearly see this is kind of a range we've built, right? From here pretty much to here. Okay, so we want to build that composite with our range tool, fixed range volume profile. So I'm going to grab pretty much here to here. And now I have some really interesting levels, right? And look where we went to with that recent price swing, right? That bounce from the bottom. We literally went right to here. Right? We filled that zone. We bounced off of it. And we sold off pretty hard. Good 80 points so far. See, that went down to 64. Yeah, 60 points. This is a key level. Right there. Now this morning's, we went pretty close to this point of control, which is the high volume node. Pretty darn close. We have a point of control down here, which has acted as support multiple times. Right, then we have our value area high, value area low. Right here and here. Right, I might mark out this. I might mark out this. This is interesting to me. And really that's it. And then this is kind of its own value area low as well from the bottom of this distribution. So then we take this away and we have some really interesting levels to look at. What's oh man, Chuck? Did you miss that giant low volume node? So, I saw that low volume node, and also, what was really interesting, I thought we were coming right to the bottom of the open, the 5-minute open, right? Which I marked that out. I shorted right here. We went a little above it, and then we sold off hard, right? So we didn't quite make it to the upper band because there's stuff happening on the higher time frames, right? And now we're back below upper band on the week and the month. Sure. Right, so look, so, really interesting. You should say that, right? So, right, here's our open. We bounce off that low volume node, and then once we break through it, we go all the way down to this level. bounce, bounce, right? So really key levels. And it's important to mark them as zones because they don't always play off the tick. If we go back to the hourly, right? So, and that's, let me redraw that. So I grab right around there to there. So that's our most significant low volume node between this distribution that's formed up here, this trading range, right, up here. And then we have this trading range, right, this distribution with a couple of interesting price levels in it. So it's really important to get to practice going through this exercise because the more you do it, the more you're going to pay attention to it. So what I recommend every day, one of the first things I'd love you guys to do. Generally, no, I wouldn't trade them with limits. I kind of want to get in, kind of want to see what happens. You know, I like to buy in the bid if we're selling off. You know, for approaching an area, I usually front run. So if price gets here, depending on what we're doing, guys, you know, I'm watching price, I'm listening to the tape, I'm watching how price is behaving, right? All right, because order flow is our here and now. Jason, this is the fixed range profile, right? So this is an hourly chart, and we can clearly see that, you know, we've built a range here on the hourly. So we can build a composite profile, which brings in, you know, all the way going back to June 26th up to today, right? We're taking in all this data and giving us some really key levels. And I have a more in-depth video on this. If anybody hasn't seen it yet, I'm going to post it in the chat here. I encourage you to go through it. It's the same thing I'm going through now, but if you ever need a refresher, or you want to go through it, you can always watch this coaching call. What's this? Right. And, you know, I know some of you have been here a while, so, and I tend to repeat a lot of things because, you know, if we don't leave the basics, the fundamentals, we never have to go back to them. All right. There's a lot to the fundamentals of this trading system and the principles that, you know, we really don't have to get too advanced. If we get really good at the basics, right? The tools we're using, the volume profile, the VWAP, and the initial balance, right? Those are our three tools, our main tools. Right? If we get good at those three things and we understand the principles. Brian asked a good question. Is there a reason I use zones on LVN and lines on the high volume node, right? That's a great question. Like, first of all, the zones, I can easily distinguish the difference when I jump to a lower time frame or just glance at them. I already know this is a low volume node. I already know this is a high volume node, right? So that helps me just on basic quick recognition know each and other. Sometimes these zones are bigger than others depending on how wide the low volume node is, right? So this is a much bigger one. This is a little one, right? We trade low volume nodes and high volume nodes differently. Okay, so low volume nodes tend to act as support and resistance. And when we break them, we can break through them fast. And then we can back test them and go up, right? So these act as support and resistance, and often support will turn into resistance once we break through them. Okay, so that's how we trade low volume nodes. High volume nodes are a little different. High volume nodes are high traffic areas, right? So these are the low volume nodes are unpopular price points, and that's why we go through them so fast, or we bounce off of them because they're unpopular prices. You don't get a lot of buyers and sellers here, so we tend to fade away from these levels unless they prove otherwise. Now, if we never went through, they don't always hold. Otherwise, price would never go up or go down, right? So they have to break, obviously, once in a while. Okay, so you know, we're going to assume they're going to hold until they prove otherwise, right? And as long as the context fits the narrative, right? How how we trade a high volume node is these are high traffic areas. They tend to be where we'll see lots of rotations and lots of choppiness, right? So we have a high volume area, right? This is where we'll get a lot of choppiness, right? The reason I use a line is because we tend to rotate around the peak price, like a distribution, right? So this isn't a perfect distribution, but when we form a perfect distribution, right, it looks like this, right? When it's nice and perfect like this, and sometimes we do have, it's nice and perfect like this, right? There's our point of control, right? Price will tend to trade and rotate around it. Now, it might not always go, it might go like this. It's not perfect all the time, right? We can go like this. Right? Until we leave for good, right? So we tend to rotate around the point of control, the high volume, the highest volume point in a distribution. Okay, so that's why I tend to draw a line as opposed to a zone with the high volume node, because I already know around that line is going to be chop and busyness anyway. I'm not usually trading it as support unless, just to make it more confusing, there's a caveat to that on the higher time frames, or if we're in a trend, a high volume, a point of control, not so much a high volume node, but a point of control can act as a support or resistance line. Okay. And we can see that, if we draw our session volume profile back on the chart, you'll often see us coming down to previous points of control. So here is, this day's point of control. You can see we came down to it right there, right? This is this day's point of control. We came pretty close to it today, maybe even this day's point of control, right? We call these a naked point of control. Is a point of control that we put in a prior day that has not been revisited. Okay, so we'll almost always come back to a previous point of control. We'll back test it and then go higher. Okay, patience does pay, especially if you're going for bigger trades. So, and these levels are really powerful on the higher time frame that you can kind of build some conviction in taking more size or holding it longer. And these concepts also happen on our higher time frame VWAPs. So we have our weekly VWAP and our monthly VWAP. Guys, look how beautiful these trades off of the monthly VWAP were. A couple times it broke, but it reclaimed. Look how much we moved. This is a 30-minute chart, guys, on NQ. Right? So talking about having a conviction in a higher time frame trade, these are trades that if you want to try and hold and get bigger moves out of, these are the trades to do it off of the higher time frames. Right? I think a lot of you guys get sucked into the setups on the intraday chart and try to catch these big moves. But, the big moves aren't really curated on the lower time frame chart, right? You're going to have much more success curating higher time, like bigger trades, bigger moves on the higher time frame, if that's something you're looking for. Now, just like a point of control, VWAP doesn't always act like support and resistance. VWAP can also act like a high volume node or a point of control, and we can trade around it. Right? It could be a point of control that we rotate around. Like on a fade, when we're in balance and we're fading value area extremes, right? So, we're rotating in this higher time frame. All right, excess price back in, Excess bounce, 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 back in, rotating. So really powerful stuff. There's always more work to do, that's for sure. Any questions on any of this, guys? Oh, Loki. Is it Loki or Loki? Loki. I'm going to assume Loki. Are the bands on the weekly and monthly just as pivotal like the ones we use daily? Yes, and yes. Yeah, I would say so. You know, you can see a lot of times. Now, the problem you're going to run into on the higher time frame bands is that they don't always play off nicely to the tick, right? And you're on a higher time frame, so you don't have a lot of room to be wrong, right? So there's a lot of times it played off beautifully to the tick, right? But there's some times where we don't, right? Excess price, right? Excess price to the tick, almost to the tick, right? Excess price, right? Excess price to the tick, almost to the tick, excess price, right? And on the higher time frame, that excess price could be significant. This is a 30-minute chart, so let's use this tool here. All right, that excess price is, it's not too bad. It's 26 ticks. This one on this upper band here, this is, that's 45 ticks of excess. So sometimes it's bad. This would have been disastrous. If you're trying to buy, monthly VWAP here, it would have ran against you, 135 ticks before it reclaimed. Correct. It should do it for you automatically, Locky. Excess price. So excess price, also taking from our concept on a distribution, right? So if we have a distribution, right? Here's our distribution, right? Here's value area high. Here's value area low. Here's point of control, or this is upper band, lower band, VWAP, whatever you want to call it, right? We still trade up here, right? So it doesn't always come up to value area high and bounce off, right? This is how we get the top of the distribution, is because price will come up here and come back down. That's how we create this little slope here. So this is considered excess price. Just because we explore this bottom part of the bell curve doesn't mean we're leaving, right? So we could have excess price and reject right back into value. We can explore outside value area high and come right back into value. So it's not that easy. The concepts work really well, but what you want to wait for, right, is a break, and materially we leave this value area, right? We call this acceptance. And we define acceptance by time or distance away from value. Yep, it's excess price unless we enter imbalance or price discovery and we head to the next value area, right? Price is always just in hunt of value. This is literally what the market is doing in perpetuity, right? We're searching out value. We find out a location, usually the big players, your banks, your hedge funds, your institutions. They agree upon price and they transact business here. They get in and out of their gigantic positions. And then when they're done transacting business, price goes in search of a new location where they can conduct business. And when they're done, they'll go back and find a new value area where they conduct business. So it's not always excess price. It's excess price if it leaves and comes back. This is excess price. We don't know, unfortunately, whether it's going to be excess price or new price discovery until after the fact, right? We don't have a way of telling what it's going to be. We can try and put together a thesis using all of our tools, our higher time frames, our cumulative delta, our, all the tools we have available to us. We can try and put together a trade idea like, this is looking like we're starting to leave. No, that would be different. Unfinished auction would be where you have like excess buyers, a lot of buyers, but no sellers here. Right? So that's an unfinished auction where you can expect to revisit that level. That's different. I don't talk too much about unfinished auctions, really. And I think that's exceptionally hard on NQ. ES would probably be a little easier. The order flow is thicker and cleaner. Sure. Return to value kind of trade versus fair value. Price discovery continuation, you mean? So what I think you mean is, actually, maybe I'll just draw it. All right, so we have our band, VWAP, lower band, right? Price is in price discovery continuation. All right, how do I know whether this is going to be another price discovery continuation or a return to value trade? I think that's what you're saying, right? Okay. So the best key, so generally when this happens, right, what tends to happen is there's going to be, on the volume profile, there's going to be a distribution eventually forming here, right? And we want to see the high volume, the value area high, and the value area low. We want to return into the bands and also start to leave that distribution. Almost always before we get a return to value after a period of price discovery, there will be a distribution having been formed somewhere near the bottom that we want to materially leave and stay out of, which makes a good return to value trade on the VWAP bands. Now we're going to assume if there's a value area high in the distribution here, we're going to expect to keep staying into it. And something very similar actually happened today. So let's take a look at that. Yes, there's always going to be chop. So here's kind of a good example. I don't know, maybe it's not the perfect example, but it's a decent example. Okay. So we got our first price discovery continuation. We kind of got our second one there, right? But now let's add the all right, so this is the information. It might be hard to see. Okay, so this is the volume profile we had right here, right? What did I tell you? It might be a little hard to see, but there is a distribution here, and there is a low volume node right there. Okay, so price came up to the band, sold off at lower band and this low volume node, right? And we continued down for the next leg down, right? So now let's expand our volume profile. Let's see what we had at this candle, right? So now down here, we've formed a distribution, right? We kind of went to the top of it, and here's the bottom of it, so to speak, right? So, and we continue to flesh it out. And this is where we finally started to break out of it very slowly. And we back tested it, right? We went up high, kind of rejected, came back to this level. We came right back down to the point of control that was starting to be built there. Oops, damn it. All right, so let's expand this a little bit. All right, and there's the point of control right here for this distribution. All right, so that's right where price went to, right? The high volume shelf. And we continued up. Fleshed out the distribution, then we finally left that and went higher. Are you sure you're not using the anchored volume profile? There's two. There's the anchored, and then there's the fixed range. Yeah, I don't know. So, you know, this stuff is definitely more advanced, guys. You know, I know everybody just wants to trade the bands, right? Which offers a lot of really good setups, as you guys know. But the bands by itself are incomplete. Right? The volume profile is going to help build a much clearer narrative. And once you understand volume profile combined with VWAP, the higher time frames and cumulative delta and all this types of stuff, you're going to start trading really, really well. But you can't just like do a class and be like, oh, I got it now, and just, you know, implement it right away. There's time and experience to this, and understanding it and watching it and building on this foundational knowledge that helps you get better. Yeah, I mean, I'm not against the second standard deviation bands. In fact, I have them on this chart right here on everything. Right? I just don't have them on my trading view just to keep it as little cluttered as possible for the stream. So I have them on there on my NinjaTrader on the screen right here. In this specific example, what gives you confidence to take the 11.15 bounce up to... Yeah, that was the point of control on the distribution and lower band too, right? So we have lower band. It doesn't always play out to the tick, right? It can chop around, it can go through it a little bit. You know, these aren't always precise levels. Sometimes they are. So that's why it's annoying, because sometimes it does play out right to the tick. But a lot of times it doesn't, right? We draw our profile. Right, so this is what we had, right? So we had a point of control here, and then we had a high volume node right here, and the point of control was right there. Right, so that's a good place to go long. We don't know that it won't rage down, Jay Scott. We just can stack some complements together for a little more conviction on the level, right? I don't know that it's going to go or not go down here. I don't. But, you know, we have to take trades and we have to assume that, you know, some of these are going to be high probability locations, and we try and make the best trade ideas we can based on the information we're given. right? So we could very well take this long here, and it could very well keep going down to here before it bounces, right? Very similar, you know. We could trade so you can either stop out or you can start with a small position here and maybe add some down here. All right, give yourself a little wiggle room and start with a starter position. Yep, and Jay Scott, that all takes time. All takes time. Right? You'll get better at it the more you watch it, the more you draw your levels out, be aware of what's going on. And you know, I can recall, guys, you know, going back in my own trading, you know, I'd have volume profile on my chart and I just wouldn't even be paying attention to it, right? I'm so absorbed with what the candle's doing and I'm just watching the VWAP bands, right? And I even forget that the volume profile is there, right? So that comes with experience. And what helps if you guys are struggling with that is creating a little checklist. And I know it sounds hokey and like, oh, I got to sit here with my checklist. But if you're forgetting to do that stuff, you know, it's a great reminder, like check the volume profile. What are my higher time frame levels saying? You know, and that will also slow you down a bit and hopefully come up with better trade ideas. You know, I've just been doing it a while. I'm able to run through all of that really, really fast. I do it every day, you know, every morning. Not only that, but I'm talking you guys through it at the same time. Yeah, absolutely. I would say, you know, always try to keep higher time frame context in mind, right? I mean, look at this daily chart, right? Like, you know, you should not be looking for big shorts in a market like this. Like, you might nail this one out of the open or whatever, but like, the theme is not breakdowns. The theme is failed breakdowns that get bought up. And until that narrative changes, we keep going with it. And the market will run in themes, right? Until we have more than one red day, which we haven't, you know, we had it here at the end of June, we had three. One was pretty much a break even day. This one was what, 50 points down? Like, you know, we haven't had a real big sell off day. We had a little bit of a red day there. June 13th. I mean, that was almost a month ago. Yep. How likely for market to revisit any excess price up or down? I mean, I think it's quite likely, you know. We revisited this side twice, you know, but I wouldn't trade excess price until it proves itself as excess price. I wouldn't just short, you know, until we, you know, clearly start moving in the other direction. Patience. I do it. There's a checklist in the PDFs, and then you can alter that any way you want. Yeah. Smaller size, let it breathe, come up with good trade ideas. You know, especially NQ guys loves to fake us out, right? It loves to make you think it's going one way, it goes the other way, it sucks in all the shorts just to rip long, and then it reverses again, right? And normally what's just happening is we're fleshing out a distribution. Yep. Well, everybody wants to, you know, make a ton of money, so we're, you know, everybody's swinging for the fences. But, you know, until you can prove yourselves on small size, there's no point in trading large size. You know, we're all here to make money, obviously. But, you know, you're just going to wind up spinning your wheels, getting too aggressive too early. I'm not talking to anybody specifically, but if the shoe fits, wear it. Well, Blair, at the end of the day, also it's a numbers game. You know, statistics are rife in trading, and just by definition, probabilities and with leverage and size and risk, you know, if you take on too much leverage, I don't care how good your system is, eventually you're going to take too many losses in a row, which are inevitable in any trading system. That's going to wipe you out. They call it the risk of ruin, right? So let's say you're trading, I don't know, you have 2K drawdown in your combine, right? And you have, you know, if you're risking $500 per trade, you only need 4 losses in a row to blow the account. And with let's say you have a 75% win rate, which most of you guys don't. But let's say you did. With a 75% win rate, what are the odds of having 4 losses in a row? Okay, it's not too bad. So with a 75% win rate, you have less than a percent chance of 4 losses in a row, right? Let's take that to 65%. Let's say 60%. All right, so we have 2.5 chance. But if you take, guys, if you take 100 trades a day or 50 trades a day, guess what? Okay. All right. So it says what? Yes, please. So it's saying what is the probability of that having? Okay. If your win rate is 60%, what are the odds of hitting 4 losses in a row in a set of trades? Right? Over 200 trades, you have a 92% chance of getting 4 losses in a row. Much different. That's with a 60% win rate. If you have a 70% win rate, no. Over 100 trades, you have a 70% chance of hitting 4 wins and losses in a row. So you can't escape math, guys. The math is always going to get you before you get it. So you have to trade with the statistics and math in mind. Right? You need to be able to sustain 4 losses in a row and be able to keep trading. Any questions on that? So, you know, theoretically, JP, if you're only trading $200 risk in a 50K combine, right, the risk of ruin, let's do this. If I stick to a $200 risk per trade and my max loss of blowing the account is $2,000. What is my risk of ruin numbers? So if you take 10 losses in a row, right? We know that already. So that's a 1-to-1 risk to reward ratio. So that's good. If you actually stick to that and you have a 60% win rate, your risk of ruin is less than 2%, which is still higher than I would want. But it is the nature of it. But do you always religiously stick to $200? And while sticking to a $200 loss, are you able to hit a 60% win rate? And stick to your 1-to-1 or whatever your risk to reward ratio is. So, I don't follow these numbers to a T. I trade based on my experience in charts, and my numbers wind up being what they wind up being. Now, you engineers in the group probably want to do this all to a T, but that takes out the discretionary nature of being successful in trading, I think, unless you're a robot. And if you guys want to act like robots, you might as well just algorithmically trade your system and just set up a rule-based system and have it trade for you. Because then there is no discretion. Why is there no break even allowed, Chuck? I break even all the time. I scratch trades all the time. I'm glad it's helpful. And I'm not saying not to do it, Chuck. I'm just challenging you on your thinking. I know, one of my mentors also talks about not break-even trades, at least for beginners. They don't know how to do it correctly. I think more experienced traders are better at scratching trades. And I will get back in. You're right. Especially if it stops me out to the tick. You guys saw how close that one of my cash account was. I had my break even, came right to my stop. Right to it. Didn't stop me out. It was beautiful. But it could have. And I might have gotten back in. Who knows? Good. Yeah, journaling is huge. Let's talk about that actually a little bit. Chuck has been a great example of journaling, even though I think he's ready to quit journaling because not quit trading, but quit journaling. All right, so let's take a look at Chuck's journal, which he sent to me. All right. He breaks down every single trade. He marks it out on a chart. All right. He puts his risk to reward. And then he gives a little blurb on what happened, why he took the trade. He names it, right? You can't name the trade. A lot of VWAP scalps, right? Look at how much he puts into every trade, guys. No lack of effort here. This is just one trading day. And then recap and lessons learned from the session. So I asked Chuck if I could share this. But this is great stuff, guys. Now, regardless of how well he did or not or is doing, I think it's, he's working on it. He's working on learning. I think anybody can benefit from this. It's a lot of work. It takes a lot of time. And he's clearly dedicated to the process. And anybody who puts this much work in, I think will eventually find success. But unfortunately, it happens in time. Everybody's different. It took me a long time as well. So, it doesn't get much better than this, I think. In terms of, he has everything in here. The name of the setup, he has it mapped out on a chart, how it performed, why he took it, what he was seeing, how much it went in his favor, how much it went, how he was feeling. It's excellent. It's picture perfect example of a good journal. Yeah, that's another thing, guys. You can record your trading. OBS, it's free, open source recording studio. Just record your screen. You could even talk to it and talk. That's a little easier than writing for some people. Maybe they just want to talk about what they're doing, why they're doing it, and then going back and watching and listening to it and then taking notes. That might be a little easier for some of you. So, if you're struggling or you're trying to get to that next level, try recording yourself. Recording yourself trade. You don't have to rewatch the whole thing. Go back to the points where there's trades being taken. Talk to it, narrate it yourself, why you're taking the trade, how you're feeling. Talk about the setup, what you're seeing, and go back and review it. I think it will be very powerful if you're not doing that yet. All right. Any questions on any of this stuff, guys? I know we have a lot of new members in the room. This might be one of our largest group coaching sessions yet. So really cool that everybody's attending and, really focused on the system and bringing their trading to the next level. The room has been fantastic. Yeah, Karn. So personally, I think, as soon as the trade goes into profit, take it. Go to the next reasonable profit level. And I talk about that a lot. Don't go for the big moves. Know you're out and know where you want to get to. And don't make it big. Make it small. Based on the volume profile and the chart in front of us. Thank you, Jay Scott. I would say, Naresh, if you haven't proven profitability over any time yet, it's not fun, but I recommend starting with one micro. It's not going to be exciting, but you're going to save your money while you learn and while you practice. And I know you have previous trading experience. I'm not trying to take that away, but if it's been a while, you haven't traded futures, this type of futures, or you've been out of the game, there's no reason to expedite it and go too hard, too fast. So start with one. If you can trade well for a week, go to two. If you trade that well for a week, go to four, And then if you go to four and you have a bad week, go back to two. All right? There's no reason to blow accounts, blow money if you can't prove consistency yet. You're just going to waste money. And I don't want you guys wasting money. You don't want to waste money. We want to make money, but you're not guaranteed to make money, guys. So until you have this shit together and you have a clear plan and prove profitability to yourself, there's no reason on going too big too soon. You're just going to waste money. So it depends, Naresh. How much time do you have in the day to trade? If you have nothing else, yeah. So I would try and I wouldn't limit your trades in the beginning, personally. I would try and wait for good trades because you're going to practice patience. I would do a morning session and then maybe an afternoon session for an hour or two, maybe 2 hours in the morning and then an hour or two in the afternoon. Small size, practice patience, look for good setups. If you're waiting and patient and wait for good setups, you won't need to limit your trades. Now, if you clearly cannot be patient and wait for good setups, that's when we start limiting your trades. It's kind of a combative move to deal with overtrading if you're unable to practice patience. So if you get to the point where you feel like you can't wait for good setups and you're just kind of slinging from the hip, taking too many trades, then we might implement some type of number of trades restriction. Yep, process before profits, absolutely. Yep, I'm absolutely happy with 10 points, Lucky. Yep. I also take bigger size, guys, so I'll take, one or two minis. So it's a lot different taking 10 points on one or two minis than it is a couple of micros. Now the strategy stays the same, obviously. I'm just able to withstand. I don't mind slinging some size around. You guys will see me sometimes. I mean, I'll have 4 or 5 minis sometimes if we're in a tight enough range. Okay, guys. Well, this has been a very, I think, productive group coaching session. This will be recorded, so if anybody wants to go back and review this, it will be in the recorded sessions. And we'll be back at it tomorrow, 10 a.m. Eastern Standard Time. We have Q&A on Sunday. And start recording your trading. Review the stream. Awesome, Jason. Yeah, everybody's been, I'm seeing a lot of great progress out of everybody. And sometimes we go back to the same stuff, guys. You can't go over too much. There is quite a bit of material. And to get to expert level on this stuff, we kind of need to keep going through it, right? Like practice, right? If you ever played sports, how many stupid drills did you do the same drill over and over and over again? More times than you care, right? It is what it is, right? We're drilling. It's not because we don't know what it is or know how to do it. It's because we want to get better at it. So think of it that way. We're drilling. All right, guys. If you're going to keep trading, manage your risk. Stay sharp. Keep your size small until you've proven profitability. I will be back at it tomorrow morning, 10 a.m. If you guys got questions, you can tag me in the Discord. I'll be around. All right. Have a great day, guys. You can use the trading lounge if you want to trade together. And otherwise, I will see you guys tomorrow morning, 10 a.m. Have a great day.